All right, thank you so much for joining. Today is February 5th, 2025. This meeting is for our LJ Realty team, and let's get started with our interest rates. Okay, interest rates are hovering around 6.95 according to Freddie Mac, and very similar on Mortgage News Daily, 7.05. Okay, and you're 6.46. So if your clients are asking, hey, what are the interest rates? We should be able to say, hey, they're hovering around 7%. Could I get 7%? You need to talk to a loan officer and go through your scenario. Are you buying a single family or are you buying two family? Is this going to be your primary residence, meaning you're going to live there, or is it going to be for investment, right? How much down payment are you putting down? And what does your credit scores look like, right? Those are the main factors. You can have great credit scores, but if you're buying 2 units, 3 units, you might pay a little bit higher interest rate. Okay, so it's just not one factor, but there are at least four different factors. Okay, but average is around 7%. Most of the files that we have closed in last 2 weeks, most of the interest rates that we're locking in for good credit scores for primary residence, single family, were around 6.99. And then we saw non-QM loans where they're not providing any tax returns and we're going through the non-QM route and they're typically paying around 7.69. Okay, so we're very competitive when it comes to non-QM loans as well. So your client can come to us for LJ Mortgage and see their options. Okay, so the last Fed meeting that we had, there were no actions taken. Basically, the rates are unchanged, right? Why is that? Because basically the Fed is saying that our economy is doing just fine. It's going at the pace that we want. Obviously, we want the inflation to come down, but it's doing just fine. So we don't have to go ahead and do any rate cuts right now. Okay? And this for the remaining year, we got a long way to go, but they're expecting only one rate cut for the whole year. And this that might come in summer. So why would that come in summer? Why are they expecting only one? Because they feel like, hey, if the inflation comes down low enough to 2%, then they can drop it so the economy can go even do even better. Where not just home prices or home sales, everything like that, but also the cars or the whole economy for the buying power when you're buying a car, buying furniture, like buying anything for that property or for yourself, you're spending more, right? So if things are doing fine at that time, they might do one rate cut, but don't expect more than that, right? So if that's the case, that means for a remaining year, we gonna see the similar interest rates that we see as of today. So these are what different people think of this, right? Most economists, they're asking for a different opinion. Where will the rates be headed? And people have different opinion about it, right? One person said, hey, mortgage rates will stay close to where they are right now. That's how we feel because the economy is doing just fine. There's no rate cuts, so we're not expecting anything lower. So between 6.5 to 7, that should be the norm for this year. Okay. Some say, hey, mortgage rates will drop, right? They might think the same way. If the Feds will do a rate cut later this year, so the rates might drop, right? But we're not expecting that. And another person said mortgage rates will uh, be near 6.5. Again, if they come down, this is according to NAR, your National Association of Realtors, and they're stating that it might be around 6.5. And that's what we think as well. If they do come down, we're going to see 6.5 or so. Okay. But that is not going to be the biggest game changer for this year. So we have to make sure that we work with our clients and explain to them that, hey, if you simply going to wait for the interest rates to drop, the home prices will even go higher when there's more demand and more people qualify. It's simple, a supply and demand scenario at that time, right? Why would I buy today? Why should I buy today? If they're asking you as a realtor, your job is to say, hey, give them the facts. Instead of renting, you're not building any equity, you're going to buy a house. If you're going to live in that house for the next 5 years, it's going to be appreciating every single year. the price is going to go up, your mortgage, because you're making the mortgage payment on regular basis, on monthly basis, so your loan balance is going to go lower. Whatever that difference is, that's your equity. That is your net profit, right? That's going to be your profit when you sell that property. You don't get that when you're renting. So you can simply wait for the interest rates to drop, or you can buy today and start building equity. As a realtor, that should be my conversation with all my first time home buyers. Hey, I understand you have to feel their pain too. Yes, the pain is real with the interest rates being high. The pain that your monthly payment, you're expecting maybe $3,000 for your mortgage payment, but it ends up $4,500, right? It is tough, but that decision that you're making today will pay off in the long run. And as a realtor, you should mention these things. Hey, if you're going to live in this property for next 5 years, you will definitely see the return. But if you're not sure and you think that you might change your job, or you might get married and you might move away in a different area, then maybe it's not the best thing to do, right? Maybe you should continue renting it. When you put your client's interest first and giving them advice, they feel that trust. They say, hey, this person is giving me the right advice now. I do want to work with them. Okay. So scenario for you guys, you might have a client that's, they can afford to buy a property for $742,000 today, and then they increase their monthly debt, right? So this family, $130,000 annual income with $65,000 down payment and $150 monthly debt, right? Everything else remains the same. At 49%, they qualify for $742,000. But if their monthly debt increases by $500. Let's say they bought a car, right? And now it goes from 150 to 650. Now they qualify for $668,000. Okay? Before they qualified for $742,000, but now they bought a car and they have a monthly of $500. Some clients say, hey, it's just $500, right? I can afford. I'm making $130,000 and $500 is no problem. Yes, it's a big problem when it comes to affordability. That $500 month must be paid every single month, so it's going to be on your credit report, so it does to income ratio. Okay? How about if they don't buy a $500 car, but they actually buy a $1,000 luxury car, right? A Lexus, a Range, or Porsche, anything, $1,000, right? Because they're making $130,000. What happens to their affordability? Now it drops to $593,000 while everything else remains the same. Okay? So this is the reason we tell your clients that, hey, anytime they are pre-approved, please, we are giving you that pre-approval based on your current situation, right? Your current situation right now is that, hey, you have $150 monthly debt, which is nothing, which is beautiful that you want to keep it as low as that. But if you have monthly obligation being added like this, $500 or $1,000, it's going to play a big factor when it comes to your affordability to buy a house. Okay. All right, guys. Next, I want to go through when your clients are asking you for down payment, or you might know for your own good that, hey, if someone is going and saying that, hey, I need 20% down payment for my conventional loan, that is not true, right? Conventional loans allow different or lower down payment, but it depends on the scenario. Okay. Some question that, hey, if it's conventional loan, I don't have to live in that property, right? Because with FHA, we say with FHA, you have to live there for a year. Conventional, we say you can be your primary or investment. But if it's going to be your primary, you're going to get better rates. You're going to get lower down payment options. And if it's going to be investment, and depending on how many families are you buying, you're going to end up paying higher down payment. Okay? So what does the breakdown look like? If you're buying a single family, right, just one unit, and you're going to live there, so there's no rental income coming, you're living there, then you can put down as low as 5%. And there are other loan programs that you can put down 3%. But the goal here to tell your client if it's going to be a single family and is going to be your primary residence, then you can put down as low as 5%. But if you're going to, it's still going to be your primary residence. You're going to live in one unit and you want to buy two family and you want to rent out the second unit, then you have to come with 15% down payment. Okay. And if it's going to be three or four more units, we rarely see that, but that's going to be 20% down payment. But typical situation that we see is that, hey, it's going to be a single family. I'm going to live there. I can put down 5% down payment for my conventional loan. Or it's going to be two units. I'm going to live there in one and I'm going to rent out the other one. Then I need 15%. Okay. Next is for your investment. You're not going to live there. You already have a nice, beautiful house and you're very comfortable in that. And now you want to buy another property that's going to be for investment, right? And for investment, if it's going to be a single unit, then you need 20% down payment. But if it's going to be, this is the surprise that most people get, is that, hey, if it's going to be a two family and it's going to be an investment for both of the units, you're not going to live in any of them, then you need 25% down payment. Okay? So it makes a big difference if you're going to live there or not, even for conventional loans. So if you guys want to go more details, we can go through that another time, but just let your clients know that, hey, down payment amount or percentage does matter when it comes to if it's going to be primary residence or investment. Okay. And some clients don't have enough money to pay your commission, right? So we go through seller's concession. You're putting in an offer and you have to ask for seller's concessions, right? And that is basically asking the seller, hey, we're offering you X amount of money, but we need some money back at the closing table. Okay. And so the seller is agreeing to pay on the behalf of the buyer to reduce the buyer's upfront cost. So one of their costs is your commission, right? Or sometimes they have for your commission and they don't have enough for their title company or any other closing costs that they may have. So we need to know the percentage when we are putting in an offer. Hey, what percentage of seller's concession we can actually ask for when we're putting in an offer? You don't want to put a ridiculous number there and they do not qualify for that, right? So if it's a FHA loan, the down payment amount is or percentage is that the maximum you can ask for is 6%, okay, from the seller side. For conventional, it depends on how much down payment you're putting down. For conventional, if you're going to put down less than 10%, then the maximum seller's concession you can ask for is 3%. Okay. If you're going to ask for, if you're going to put down 10 to 25% down payment, then the maximum you can ask for is 6% from the seller side. In rare cases, there might be a conventional loan where they're putting down 25% down payment and then they can ask for 9% seller's concession. The reason we don't see this 9% in most of the cases, because if your client is putting 25% down payment, that means they have enough funds to, cover their closing costs or discount points. Why are they asking for seller's concession? So the third one or the last one, we rarely see it. Okay, so if it's FHA, the maximum you can ask for is 6%. If it's conventional, you can ask for 6%, but only if they're putting down 10 to 25%. Or if they're putting down less than 10% for conventional, then the maximum you can ask for is 3%. Okay, so this could be part of your conversation when you're talking to your buyers. Hey, I need to get paid 2%. Maybe you don't have the money. Maybe you do have the money. Is that 2% set in stone, the commission that I'm asking for? Absolutely not. It's all negotiable, right? So they say, hey, fine, I'll pay you that 2%. But I don't have that funds because I'm surprised because there's closing costs that my loan officer told me. I thought that I just needed my down payment. So then you can tell them, hey, if you don't have enough funds, let's put in an offer with seller's concession. So later on, when we will actually do an offer sheet today, we will put this amount in there or percentage in there, right? So this way, the seller is going to go ahead and give money back to the seller to the buyer, sorry, at the closing table to cover their closing cost. Okay, so why would a seller want to do this? Why would a seller actually want to give seller's concession when the property is not selling or property doesn't have enough offers in, right? Maybe you're offering a little bit higher than the other offers that they got. If they already have other offers higher than you and that is not asking for any seller's concessions, they're not even looking, they're not going to entertain your offer at all. So there might be a property or two where they will allow this. Not every offer gets accepted with seller's concession, but your first approach should be, hey, Mr. Buyer, you're offering me, I'm asking you for 2% commission. My first job is to ask the seller side, hey, Mr. Listing Agent, Miss Listing Agent, I have a client. We're willing to offer you $1 million, or we are willing to offer you $500,000, but we're asking for 2% commission, right? You put that in the offer and see what happens. If that's a no, right, then you say maybe we can put it in the offer for seller's concession. We're offering you $1 million, but we are asking for 3% seller's concession. So that's $30,000 going back to your client. Okay, which one is better for your client? Seller's concession or the listing agent just offering 2%? So any listing agent that's going to offer any commission to you is definitely going to be better for your client, right? Because that money is coming from the seller. So if the seller is offering, the listing agent is saying that, hey, we are willing to give you X amount, that's great news. If not, then you probably want to go this route. Okay. Let me know if you guys have any questions regarding seller's concession, guys. Okay. Next, guys, couple of slides for stats. Your month supply, there's about 4 months of supply out there right now. So inventory, it is limited on nationwide, but when we're looking at each market, like South Ozone Park has a lot less inventory than Richmond Hill, right? Elmont might have a little bit more than Franklin Square, right? So different markets, we just need to be becoming expert in maybe 4 or 5 different markets. We cannot go ahead and conquer the whole New York as a realtor, but as a realtor, wherever, this could be near this office, this could be near your house, wherever you live right now, anything, all the zip codes that's surrounding you, right? It might be 3 or 4 of them. You need to know all the stats about that. How many properties that are actually available there, right? Which properties that might be good for my client, right? And the sold property. Hey, this property was sold for this price. That stat right there will tell the client if you are an expert in real estate or not. If you're able to pinpoint, hey, this property in this block was sold for this much, right? Instead of saying, hey, let me do the research and, but if you're keeping an eye on those zip codes on a regular basis, guarantee you when you're talking to your client, they will know that, hey, you are a real estate expert when it comes to the properties and inventory. Okay. We mentioned last week that we need to start seeing more support from our agents to our listing agents, right? Our buyer's agent should be connecting with our listing agents. In even if you don't have a client for that property. And what is the harm of actually just going to that property, seeing a listing agent from your own office, right? And just looking at the property and determining if the price is right or not, and giving your honest feedback, right? You could be brand new, or you could have 20 years of experience and do the same exact thing. So we really want all our agents to connect with each other and try to find clients and go under contract together. With proper disclosures, there's no issues. Okay? So we want, because there's the lack of support that we see from each other, it really disturbs the whole office. We really want to see that, hey, if there's an open house, go to see that open house. It could be from our agency or others. And if there's a private showings like this property that just came on the market, every one of us at least take a look at it. Is nearby the office. What's the worst thing that can happen, right? You probably sell it by go under contract with them, right? So this property is just listed with Herjeet. It's on Inwood Street, two family, brand new construction. Highly recommend that you guys check that out. Okay. Second one is listed by AP in Hicksville. So we have about 20, 25 agents that can serve that full area of Nassau there. So you definitely want to get in touch with AP and see this new construction in Hicksville, single family, 6 bedrooms, 5 baths. Okay. Another one is listed by Shito, and this is listed on 165th Street in Jamaica. And there's a single family, 6 bedrooms, 3 baths. So this property had a price reduction as well. Again, if you don't have any clients, go see the place yourself first. And then when you're looking at the property, you might say, hey, this is a nice lot size. Maybe this has this good features, or maybe it's overpriced. And you tell that listing agent, hey, I'm looking at other properties. Remember, there's another one maybe on 163 Street, and that one was sold for 750, and you're asking for $900,000. How come? Those are going to be your icebreakers, guys. And the last one here is in Valley Stream. So listed by Ravi, one of our agents here as well. So if you're by listing agent, if you're nearby a Valley Stream, highly recommend that you guys connect with Ravi and see this property. So we're not asking that every agent should go see every property, but we just want to get the feedback. Hey, agents, the buyer's agents are actually coming from LJ to this listing and on regular basis and just looking at it. You don't have to go every time. Just one time is enough, right? So guys, please show support to each other. If there's an open house listed, we're trying to share more and more on WhatsApp with you guys and just start connecting with each other. Okay? More stats for you guys that hey, new family houses are being built, are being sold. Some of you guys or some of us in general, when we look at a new property and say, hey, it's listed for $1.4 million is way too high for me or you, but not for your buyer. Maybe their income, their level of thinking might be completely different. They might be coming from a different area where the prices are even higher, and they're coming to this area, right? So we don't know what the client is thinking. Do not judge your client at all. And if you find something, hey, I've been selling all my properties around $800,000 or $900,000. I'm a new agent and I'm seeing properties being sold for 1.4, 1.5, single family. Yes, there are buyers out there who are buying luxury properties. We just got to make sure that we're ready to serve them as well. Okay. If your client is asking you, hey, I'm a first-time home buyer, and I just checked some calculators online, and I think I qualify for $500,000. Uh, as a realtor, you want to tell them, hey, there's a big difference when you feel like you're just pre-qualified, but and the difference between pre-qualified and pre-approved. Pre-qualify is basically nobody's checking anything thoroughly, and no loan officer is giving any document, right? They might just say, hey, you can qualify for $500,000 without checking any documents, just by based on what the seller or whatever the first-time buyer is telling us as a loan officer. How are you going to be sure about that? By looking at the pre-approval. And when you're looking at the pre-approval, you want to make sure that as soon as you see a pre-approval, is to call that loan officer. Hey, my name is Janet. I'm with LJ Realty Team. I have a pre-approval from you, Mr. ABC Mortgage Company, right? And I just want to connect with you that I'm about to put in an offer for $800,000. I see that this client, this pre-approval says he is qualified for that $800,000. But let's just talk about that client for a few minutes, right? How fast can you close this deal, Mr. Loan Officer? How are the income, their debt looks like? Will we have any problem? This offer that I'm about to put in is actually for two family property, right? And these are the specs. connect with that loan officer, build relationship with that loan officer. So this way, that same loan officer is going to stay connected with you until the closing. So why not do it when you see the pre-approval right away? Okay. All right, guys. Next, as a realtor, one of the values that you're bringing to any client out there is the negotiation. And when we say negotiation is just not the price, guys. It's a lot more than that. So we want to make sure that you guys are on top notch when it comes to negotiation. Number one is to do the research. As we mentioned, if I'm putting in an offer for South Hilton Park for two family for brand new construction, has six bedrooms, three over three. It has five bathrooms, two over two, and one in the basement, finished basement, 40 by 100 lot size, right? So just by even not even looking at the property, just by those specs, I know that that property is going to go for at least $1.3 million dollars, right? It might go for 1.4 or it might go even for 1.5 million depending on the stuff that they have done, right? What type of material that they use. So I have a lowest range of 1.3 and the highest 1.5. That's $200,000 difference. So I need to figure out what price range I'm going to put this in. What is the listing price is listed at, right? So you need to know that, hey, is South Hilton Park a buyer's market or seller's market? Do we have 10 other properties listed on the same, neighborhood in 11420? If I have 10 options, then I have a lot of choices, or your buyers have a lot of choices. That means it's a buyer's market. Buyer have a lot of choices. But is that true right now? Do they have 10 other properties? Absolutely not. They might have maybe two or three other options to look at. So then it's a seller's market. If it's a seller's market, I have to make sure I price it or I put in my offer correctly. Okay. Recent sales, as we mentioned, sold properties that cannot hurt you at all. It will only gain your knowledge will be going up and up and up because you're keeping an eye on the inventory. Hey, what new properties are coming? That's great. It's listed for whatever. But what is sold for? That's even more important. Okay. And you want to start with a competitive, offer. You don't want a low ball. You want to, if it's going to be competitive, whatever they're asking for, we don't want to give that either. You want to do the research and put in an offer that's going to be competitive. Okay. So you want to negotiate beyond the price as well. We mentioned your seller's concessions, right? To cover the closing costs for the repairs or include any appliances, right? You want to use your home inspection and appraisal contingencies. Hey, we're willing to give you $1.5 million dollars, but we want to make sure that it's appraised at that price. The bank actually agrees on it. If the bank says this is 1.45, then we have a $50,000 gap. Then, Mr. Seller or the listing agent, we have to renegotiate. And if the home inspection reveals there's major issues, then we have to lower the price as well, depending on the issue. Okay. And when it comes to when you guys are putting an offer or even at the showing and everything, let your client know that, hey, keep your emotions to yourself. When, even if you're excited, you love the house and everything like that, you want to make sure that at the showing you keep it professional. You just show the property and do not talk as a realtor and the client in front of the listing agent. Don't provide any feedback right there. Just leave the place and then talk it out. Hey, I like this, I like this, I don't like this, I don't like this. You have a list of likes and dislikes, and then you go ahead and put in your offer. Okay? And if you're really want to negotiate, if you want to see that you have the power, then be ready to walk away. Hey, it's fine. We'll find another property. Another property may come on the market next week, next 2 weeks, next 3 weeks, depending on the area, right? So if you have that power, then you should be able to make that deal happen. And how about if you're the listing agent, right? You're on the quite opposite side. So one is your overpricing. Anytime we talk to any sellers out there, right, they're always overestimating their price. If it's we think that it should be listed for 900,000. They have a million in mind. If there is a brand new building and we're telling them 1.2, they're saying no, 1.3 or 1.4, right? With overpricing, you're pushing the buyers away. And then you have to decrease the price every week or 2 weeks because nobody's showing up to your open houses, right? So why not do the research beforehand, guys? Right? And tell them that there is a strategy that if you're going to list it below the market value price, right? It should be listed for a million, but let's list it for 950, $50,000 less. So this way we can create a bidding war. Anytime we have an offer, we can tell them that, hey, put in your highest and best offer. And when you have that mentality, you have multiple offers, you tend to win as a listing agent and the seller because you're going to have a bidding war and the price is going to go up. And you might end up paying, or you might end up accepting an offer very close to $1 million or even a little bit higher than that. Okay. And you want to, if you're a listing agent, when you're at a listing presentation, you're viewing the property and everything like that. One, you have to make sure that you're taking notes, right? Because you're viewing the whole house, and it's almost impossible to memorize everything that you saw in the basement, you saw on the first floor or the second floor. So start making notes for everything, all the positives and the negatives, right? So you want to make sure that if there's anything minor things that needs to be fixed, hey, Mr. Seller, let's fix these things so we don't have an issue later on and nobody's downgrading your property. Okay? And when you're seeing the offer, as we mentioned, there might be offers that might be a little bit higher than the other, but it might have more contingencies or asking for seller's concession, or you might get a cash offer and it's really below, and you might be asking for $900,000. You have a cash offer for $800,000, right? So obviously the seller will say, hey, that's way too low. I'm not going with that. Or you might have another offer for $1 million. That might be a FHA loan. It might have contingencies in there. It might be asking for seller's concession, all of that. Your client needs to decide that. I don't care if I receive a offer that's really low or offer that's really high. Any offer that we receive, we have to present it to the seller and talk about it. Hey, how should we go ahead, instead of just saying no to them, how can we actually negotiate this? Okay. And if you can create an urgency, that's great because you get, hey, more offers in and quicker, and quickly you can go under contract, guys. So use these strategies. Always research before you put an offer. If you're a new agent and you're going to a listing presentation, let's do the research beforehand. Come to the office, set up an appointment with me. Let's spend half an hour together. Let's research everything about the property, right? Let's go over our seller's takeaway amount because that's what the sellers are, what they care about, right? If I sell it for $1 million, what am I going to take home? So you go through that. So all those things matter when we're going to be a listing agent. So if you're the buyer's agent, do the research. If you're the listing agent, do the research. Where do we do the research? On Matrix. Okay, Matrix has everything that you need to see all the properties in any zip code that was sold, anything that's available, and compare apples to apple. Hey, whatever area that you're serving. Okay. All your communication should be clear communication. All the communication should be very professional. It does not, need to be lengthy. Anytime I'm having a conversation with anyone, my conversation is usually short, right? Because I try to keep it professional and to the point. If we're talking about this, let's just stick to the topic and let's get it over with. This could be my buyers, it could be the sellers, it could be the attorneys, it could be the home inspectors. Keep it professional all the time, right? If you're getting an email, reply to that email. If you're getting a text message, reply to that text message in timely manner. If you're getting a phone call, but if you missed a phone call because you have a full-time or part-time job, make sure you return that phone call. Or if somebody's calling you, you're not able to pick up, reply back with a text message. Hey, I'm not able to talk right now. Text me and I can communicate through this. Keep it professional, guys, right? Being licensed, getting your real estate license is one thing. actually using it on a regular basis and keeping it professional and making some money out of it, right? Commission out of it, it's a big deal. So my buyer says, I went through a presentation. Hey, Mr. Buyer, I need to get paid, right? I'm not working for free. I'm going to show you houses. I'm going to negotiate for you. I want to make sure that you're in that new house as soon as possible, right? With the new changes, some sellers are offering some commission, some are not. But I need to get paid 2% for this deal. Is that 2% set in stone? Absolutely not. It's all negotiable. You guys can charge whatever, right? As long as, remember what, you're competing with other agents out there, and you have to put yourself in your buyer's shoes. Hey, if Mr. Ali is asking for this much, Sclarion is asking for this much, and maybe Kimberly is a new agent and she's just asking for you 1%, they're not just looking at the percentage, they're looking at you as a professional, what kind of experience you have. So everything's negotiable. So you need to make sure that you're setting a price or a percentage that you need to charge your client, and you can do that every client. You guys can have different amounts, right? Is whatever area, whatever, you guys can set different prices. Hey, if I'm selling a property over $1 million, I'm charging this. If I'm selling less than $1 million, I'm charging this. So let's just say we agree to 2% from the buyers. And now the listing agent says, hey, they happen to offer 1.5%. So can the buyer's agent get paid 3.5? Anyone out there? Anybody? Could I get paid 3.5 because the buyers are paying me 2% and the listing agent said 1.5%? Anyone? Are we allowed to get paid from both sides? If the buyer, we have an agreement with the buyer that we can get paid 2%. And the listing agent says, hey, we're offering buyer's agent 1.5. Anyone want to take a guess? Could I get paid 3.5% or not? Nobody. Nobody. So the answer is no, right? I cannot get paid 3.5%. I can get paid from both sides, but since the buyer had agreed to pay me 2%, that's the maximum I can make, 2%. Okay? The listing agent is offering 1.5, so that's good news for your buyer because now your buyer owes you less, right? Your buyer owes you only 0.5%. So the maximum you can get is 2% because your buyer's agreement is 2%, and the listing agent said, hey, the seller is offering me 1.5%. Now your buyer owes you only 0.5%. Okay. So they're mentioning that on average, since the changes of last August, right, the buyer's agent's commission has decreased a bit, and so did your listing agents. So this is on average. That's why you see the numbers like this, right? So there's no set price or percentage. Everything is negotiable. So if you're the listing agent, you can approach it in one way or another. Hey, Mr. Seller, you only got to pay me, right, to represent you, and we don't have to offer anything to the buyer side. Or you can say, hey, Mr. Seller, when we're listing it, if you want to sell it quickly, let's offer something to the buyer side. So this way we can sell this property quickly. Not every buyer out there has money to pay commission to their buyer's agent. So Mr. Seller, let's offer them something. Okay, that's why still majority of the deals that is being done, the sellers are offering commission to the buyer's agent. The change that came is that we cannot require the sellers to pay the buyer's agent, right? They're not required to pay, they have the option to pay. If they have the option to pay and they want to sell the property quickly, they are offering commission. So whatever commission that they're offering you, just subtract it from your buyer's agreed uh, form that you have. Okay. All right, guys. Next, I want to show you our transaction desk here. In transaction desk, as a buyer, right, we're putting our buyer's name, we're selecting the template so I can see all the forms. I'm unchecking use wizard and I'm going to hit create. Right? I have a brand new file. I don't have to fill any of this out. I'm simply going to my forms, and now I want to make sure my buyer signs that 2% agreement that we just spoke about. I would click on that exclusive buyer representation agreement, and on here, your section 2 has this broker fee, and you can put the amount there. Okay, because we're going to be short on time, guys. I'm going to do this quickly, but this is the most important thing. This is where it's telling you that the buyer will pay you guys 2% commission. Okay, your length of agreement, it will start today, and how long is it for? We already mentioned that. It all depends on you. You want to keep it as short as a week, or you want to keep it as long as 6 months, is all up to you guys. Okay. Difference between residential and residential income. This is your single family. This is 2+ units. Okay. If you want to put in the information here, good. If not, that's perfectly fine. Just put in the county that, the area that they want to be in. And then you have them sign where it says buyers. Okay. It's super simple, but the main thing is for you guys to review it, read it, understand it. So this way, when your client is asking you something, hey, if I were to get offer from the seller side, this paragraph tells you exactly that. Okay. Where does the numbers go? The numbers go in section 2. You have your dates and you have their signature. If you have those parts, that means you're good to go, right? Your client says, hey, they're willing to pay you. Okay. This is when we're putting in an offer. Today we spoke about seller's concessions, and we spoke about getting paid from the buyer from the listing side, right? The seller is agreeing to pay us 1.5%. I'm putting in the buyer's information here, their address, and now let's go through this. This is where you have your property, right? We put in the MLS number here, proposed closing date. If your client is getting a mortgage, you probably want to put in 45 days there. Okay. If your client has a cash offer, you probably want to put 15 days there. So 45 days for mortgage, 15 days for cash offers. Okay. Because that's the typical time that we see. March 15th, maybe let's just put it here. This piece right here, it says property disclosure form to be completed and delivered. You want this, yes, right? This is saying that, hey, for this property, we need the property disclosure filled from the seller side and we need that delivered to our client. Okay. Purchase price, let's put in $500,000. Seller's concessions, this is the dollar amount. So if you're asking for 2% back, then you're putting in $10,000 here. Okay. So that is seller's concession. So for this offer, as soon as we put in $10,000 here, automatically we're telling the seller or the listing agent that, hey, our offer is not for $500,000. It's actually for 490 because we're asking for $10,000 back. Okay. This is your seller's concession. Down payment. Some people get confused and put the full down payment amount here. No, this is your earnest deposit. I wish that they put in earnest deposit, the wording earnest deposit here instead of down payment. It says payable upon execution of contract of sale. So when you're signing the contract, how much money they're putting down. So if it's a $500,000 property, I think $10,000 are okay there. Okay. What is the listing agent is going to say and call you back? Hey, we'll accept your offer, but you have to put more money as your earnest deposit. This is where they're talking about they want your clients to be even more serious, and you reply back, hey, $10,000 is a good amount. If you're the listing agent, no, I need maybe $25,000. And you guys negotiate and see where your clients are comfortable putting which amount in here. Okay? So let's say they're getting $400,000 loan, right? So that means they have $90,000 gap right now. So if they're putting 20% down payment, right? So they have $90,000 before the closing, $10,000 on the contract, that's 100,000, and they're getting a mortgage for 400,000. So collectively, you have $500,000 here. And that $10,000 now is going to come back to your to the buyers at the closing to pay whatever expenses they have to pay for the closing. Okay? Now, section F, this is the most important part. This is when some of you guys are putting an offer without even talking to the listing agent, and that's perfectly fine. You're basically offering them, right, a offer with a request, or we're telling them that, hey, we need this much money back for our buyers because the sellers are paying the commission for that. So seller's payment to buyer's broker, if applicable. Seller agrees to pay to buyer's broker an amount equal to that percentage. So let's say you put down 2% here. Okay. In rare cases, you would put 2% here and ask for seller's concession. We usually see one or the other. We either see, hey, you're asking for seller's concessions, or you're simply asking for 2% from the seller side. So if the seller has agreed to pay, I would leave the seller's concession blank. What does that mean? That means that they are getting $500,000 offer, but they still need to give $10,000 back to the buyer. So there is a difference between seller's concession and your seller's paying your buyer's broker fee. If you were to use letter F here, this is much better for your client as a buyer's agent. Okay, we don't have to worry about appraisal or anything like that. We're not asking for, there's no difference. The best thing for your client, if the seller side or the listing agent says, hey, yes, you asking for 2.5, I mean, you're asking for 2%, but we're willing to give you 1% or 1.5. Whatever amount that they agree to, then the remaining balance, your client is owed that amount to you. Okay? Guys, please let me know if you guys have any questions on this, because this is every offer that you're putting in. This is the strategy that you're going to want to use for your client. That, hey, Mr. Buyer, if you don't have enough money to pay me for my fee, I can either ask for a seller's concession. That means you're paying that fee right now. But if you want the seller to pay, then use section F. Okay? If any questions, guys, please speak up and let me know. Okay? Contingencies. If you're checking these off, that means you're telling the listing agent, hey, we have a pre-approval, but I want to make sure we have a commitment letter. I want to make sure that my client can get a loan for this amount. Okay? For home inspection, again, if you're checking it off, you're telling them, hey, there is a home inspection contingency, and we want to make sure that everything is good with the property before we move on. Okay? If your client says waive it, waive my home inspection, then you uncheck it. In rare cases, they might say, hey, waive the financing, then you would uncheck it. I would leave the financing checked at all times. I want to make sure that my client actually can get the financing. Okay. Section H and I, if you want to include them, that's fine. You're telling them what type of financing they're getting, what property, personal property should be left there, what is going to be included or excluded from there. Okay. And then you're going to have the purchaser sign. Do you think that the seller is going to sign? We have not seen any offer, or very rare that we see that the seller would sign it, acknowledge it, and send it back. You're basically filling it out. You're having your purchaser sign this and sending it out. Okay. So this is our offer. Now the listing agent said, hey, we don't want to pay you 2%. We can offer you 1.5. How could I be making sure that I'm going to get paid 1.5? Because my offer says 2% here, unless I go ahead and send a new offer with 1.5 in it and have them acknowledge it, that's fine. But there's a better form. And the better form is right underneath it where it says confirmation of seller's agreement to pay buyer's broker. This is the form that gets you paid. Okay, this is the form that we need the listing agent sign, have the seller sign this form, so there's no questions. So the title company or our brokerage, anytime they ask for a bill or agreement that the seller will pay this amount, we show them this form. So it's called confirmation of seller's agreement to pay buyer's broker. So once I click on it, I see the subject property. You guys know the subject property because you put in the offer for that. You get your the seller's name from the listing agent. You get the listing broker. That is going to be your listing agent, or it could be the not the broker, not the listing agent's name, but the brokerage that he works for. So how we have buyer's broker LJ Realty, you're going to have a listing broker. It could be Keller Williams, EXP, anything that you any agent that you're working with. And then you have your buyer's name there, and we have buyer's broker, LJ Realty Team. Okay. Then this is the amount where you're going to put, where it says number 3 here, seller agrees to pay buyer's broker in the amount or equal to 1.5, right? Even though you put in an offer for 2%, you got a call back from the listing agent, hey, we'll accept your offer, but we're only paying 1.5. So you put in 1.5 here, and then you send it out for the seller to sign this. Most of the time, you will not have the seller's information or seller's email. So, what is the best thing you can do? Is basically sign it yourself and then and email it to the listing agent. Hey, I need this form signed. I'm pretty sure they would not have any questions because this is very uh, regular form that everybody's using. So when we're creating a commission invoice, we would need this that, hey, seller is actually agreeing to pay you and you want to get this done as soon as possible. Okay. Okay. So you still have your co-brokerage agreement as well. Not a lot of people are using this anymore, right? There are some agreements where it says that listing agent is getting X amount and he's going to be sharing that with the buyer's agent. Then you go with co-brokerage agreement. But most of the deals that we're dealing with right now, the sellers are paying and we need this form signed. Okay. Questions, concerns, guys, please speak up and let me know. Okay. All right, guys. I do have more slides going on, but I think I want to end it on that note because we went through the seller's concessions, we went through your commission. The main thing is that any client that you want to work with, you have to bring some value to them, right? So if you're speaking to them on the phone, the first approach should be, hey, can we meet at our office? Right? I want to set up alerts for you. I want to set it up where we can see which area that you want to be in. I want to start sending you properties, but I want to do it together, right? You're not telling them to sign any documents or anything like that, right? Over the phone. You're saying, hey, let's meet in person. When you're meeting in person, this is where you're going through the whole presentation. Do you need to spend 2 hours with them? Absolutely not. Even if you're spending 20 minutes with them, that will go a long way, right? You're telling them what it really takes to buy a house. You're showing them matrix. You're adding them in matrix right in front of them, and you're clicking on alerts. And hey, you want to be in South Ocean Park, or you want to be in Queens Village, or you want to be in Elmont? Let's find you properties there, right? And start looking and drawing a map with them, right? This way they feel like, hey, you know exactly what you're doing, and send them the first message right when they're sitting with them, right? So this way they have a welcome email, they know what one home looks like to them right there. And after that, you're telling them, hey, I want to make sure that I tell you up front that I need to get paid. And these are my, forms, these are the disclosures. You don't have to sign right now, but I can still keep sending you properties as we set up. But before I can show you the first property, I would need these disclosures signed. Until then, I have no problem. You take these forms with you and sign it whenever you feel like you're ready. But have a clear communication with them, a conversation to go over the process, go over the commission, and tell them, hey, my goal is to get paid from the listing side. I will try my best to get paid from the listing side. But if that's not the case, I can't work for free. I need to get paid. Okay, and hopefully that will bring some value to them and they sign your documents. Okay, all right, guys, we're running out of time. Thank you so much for joining, guys. I will see you guys next time. Take care, guys.